Today's crypto news, July 21st. Bitcoin just touched its highest price in 5 weeks, and it's dragging the entire crypto stock market up with it. Welcome back to your daily crypto podcast. Today we've got 5 stories covering price action, regulation, and a surprise leadership shakeup. Let's get into it. Bitcoin jumped to nearly $67,000 on Tuesday, its best level in about 5 weeks, up close to 3% in a single day and around 6% over the past week. That move pulled crypto-linked stocks along with it. Strategy climbed back above $100 a share, and Coinbase and Marathon Digital both posted double-digit gains. Here's the twist, though. This rally is happening even as Middle East tensions escalate and oil prices climb toward multi-month highs. Normally, that combination would spook risk assets, but for now, Bitcoin seems to be shrugging it off, largely thanks to fresh buying from ETFs. And that's story number 2. US spot Bitcoin ETFs just posted their 5th straight day of net inflows, pulling in about $727 million over the week, the strongest sustained buying streak since the record outflows back in June. Analysts say this doesn't necessarily mean a flood of new institutional demand, but it does suggest selling pressure is finally easing off. The number everyone's watching next is $65,000. If Bitcoin can hold above that zone, the case for a real uptrend gets a lot stronger. Third story, and this one's a genuine regulatory win. Ripple secured a full MiCA license through Luxembourg, which means the company can now offer crypto payment services across all 30 countries in the European Economic Area with a single approval. XRP responded by climbing more than 3% to around $1.13. And some analysts see this as more important than it looks on the price chart, because unlike a headline pump, a license doesn't expire when the sentiment shifts. A few more headlines worth knowing about today. Ethereum is having a strong week on 2 fronts. Tokenized ETFs built on its network just hit an all-time high market cap above $500 million, led largely by Ondo Finance's tokenized stock platform. And separately, strategist Tom Lee argued Ethereum has outperformed AI hardware stocks by 55 percentage points in a month, framing ETH as the settlement layer that AI agents will eventually need to move money. Also today, Solana's Jito Labs launched JTX, a self-custodial trading platform bringing professional-grade order tools to Solana tokens and tokenized real-world assets. Another sign that the tokenization race between chains is heating up. And finally, a leadership shakeup. Jack Mallers stepped down as CEO of 21 Capital, the company holding over 43,000 Bitcoin, worth almost $3 billion, to return full-time to his other company, Strike. The planned 3-way merger between 21, Strike, and mining firm Electron Energy has now collapsed, and the stock dropped 9% on the news. Put all of this together, and the picture looks like this. Institutional money is quietly coming back through ETF inflows. Regulatory clarity is advancing in Europe faster than in the US, and the tokenization race across Ethereum and Solana keeps accelerating no matter what price does day to day. The wild card is still macro. Rate expectations have been swinging around fast this week, so don't assume today's green candles mean smooth sailing from here. So here's one thing worth doing today. If you're holding any crypto asset long-term, take 2 minutes to check whether the project actually has any real regulatory progress behind it. A license, a partnership, an approval, versus just a price pump on a headline. That distinction tends to matter a lot more 6 months from now than it does today. That's today's crypto rundown. If this was useful, hit subscribe so you catch tomorrow's episode. See you in the next one.